Sean.
Bob.
Welcome to the program, man.
Thanks for having me.
It's so good to see you.
It's nice to be back on the airwaves.
Yeah, exactly. You were on for 6 months, weren't you?
Yeah, 6 or 7 months. It was a good time.
Good.
Had a lot of fun.
So we want to talk to you today about FHA loans, USDA loans.
Okay.
You know, all the loans. I mean, what's the most prevalent in the marketplace right now?
FHA is by far one of the best loan programs right now for first-time home buyers. It's got the least amount of restrictions compared to some other programs regarding income limits, location. VA actually has a good program as well right now for 100% financing, but not everybody qualifies for that.
Yeah, right, exactly.
So FHA is one of the better programs for people who are looking to buy a house to actually move into, and it's
but
the
if
most
you've been in the military, that would VA would be just fantastic.
VA is a great loan program because it allows 100% financing. Yeah. There's no city or location requirements. You can buy anywhere.
Great. As
long as you have your eligibility, and there's no mortgage insurance, which is a really good benefit to keep the monthly payments down.
So let's talk a little bit about the most popular being FHA, and FHA being Federal Housing Authority?
Federal Housing Authority. Basically, Fannie and Freddie buy the loans, but the government insures them. And that's what it is. It's a government insurance loan.
So it's a government insurance loan, and how much does a first-time home buyer have to put down on an FHA?
The minimum requirement is 3.5%.
So 3.5% of the purchase price.
That's correct.
So if I want to buy a home out here in the desert, we know we can all buy one for $100,000. I'm looking at $3,500. But there's probably some more costs associated with that.
There's I don't want to say a lot of closing costs, but it depends on how you structure the loan, and you can get in with $3,500 to $5,000 depending on how you structure the loan.
Over and above the $3,500.
Over and above. Okay. Yeah. However, you can structure the offer so that the seller actually contributes towards your closing costs to minimize the amount of money that you need to come up with.
How much can they contribute?
Right now, they can contribute up to 6% of your purchase price. And
that's a change, isn't it?
Well, that's what it's been for a little while.
Okay.
So 6% is what it is today. I'm seeing between 3.5% and 4% on most offers, either for short sales or bank-owned properties. So it's not uncommon to ask for it and to get it.
Okay.
So don't be afraid of asking for the closing cost concession, because most of the time you can probably get it. However, starting in April, the new mortgagee letter from FHA is telling us that they're going to make some changes. And one of those changes actually includes changing the seller's concession for closing costs from 6%, which it is today, to only allowing 3%, which is fairly common. I mean, 3% still covers the majority of your closing costs. So it's still a great opportunity. They're just going to change that for the future. So if you are a little bit short to close, let's get those offers in. Get them
in now.
Get them in now. You're also going to be able to take advantage of the lower mortgage insurance premiums for FHA if you get it done now, opposed to in the future once it changes.
Did you say they have to close by April 1st or be in escrow?
We actually just have to have the escrow opened.
Okay.
We need their offer accepted so we can pull an FHA case number.
Got it.
It all goes off of case numbers. So once your lender pulls the case number, then you're going to be grandfathered in on that property. The case number is actually property specific.
I see.
Okay, so I'm a first-time home buyer.
Okay.
And I'm working really hard to make sure my credit's good. For FHA loans, what's the minimum credit score that I can qualify for an FHA loan?
The minimum FICO score is typically 620.
Okay, 620.
620. The mortgagee letter that's coming out is allowing lower credit scores. I just don't know which banks are actually going to be underwriting those loans, because the tests and performance of loans with FICO scores under 620 haven't performed very well. So there are some extenuating circumstances and case-by-case basis why they may approve or not approve certain scores under 620.
Okay, so what we're really looking at is you have a credit score of 620, you could be eligible for an FHA loan, and if you have a better credit score, does that mean you get a better interest rate?
Yeah, actually, interest rates are currently priced off of credit scores. So,
really?
Yeah, if you have a score between 620 and 640, the fees might be a little bit higher. You might get a slightly higher rate. If it's between 641 and 660, it falls into 20-point tiers.
Okay, so that's really important for you listeners out there. When you are getting ready to buy a house, make sure you've cleaned up your credit, because that is the number one and most important thing that the banks are going to look at is your credit score.
Right, and it doesn't necessarily mean that you actually have to pay off your credit cards. It just depends on what your debt utilization ratio is, which means what your balance is compared to your limits. It doesn't matter that you have outstanding consumer credit card debt. You don't necessarily have to pay it off. Some buyers like to, so that they know that they don't have those payments. But I hear all the time that, I want to wait to apply because I want to pay off all my debt. And it's like, that might not make a difference in how you get approved. You might be approved for the same amount, and your FICO score may not even change because of that.
Yeah,
but you need to get with the lender to decide,
right,
what direction you're going in, if you are approved or if there's something you need to work on.
Right, because my understanding is, because we've talked about this before on one of our programs, we talked about your credit score and making sure that if your debt is on your credit card is 50% of the total available credit.
They really like to see it more at like 30%.
30%, okay.
Yeah, 50% will help your score go up.
Right.
30% to maintain that will make sure that your score is always high.
And the truth of the matter is, this is very complicated and it's complex. And the first step you want to make is to call you, Sean LaRue, right?
Right.
And give them your phone number, Sean.
Yeah, they can get a hold of me anytime at 760-835-5663.
But if you'd like to talk to Sean right now, and you have a question for Sean on the air, that's fine. We'd love to hear from you. Just give us a call at 760-416-8475.